Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Anna Koritz of RBS, and we're going to talk a little bit about some of the upcoming changes related to Sepa in 2016. So what are some of the changes that UK and non-Eurozone European corporates need to understand in regards to the 2016 changes?
If UK and other non-Eurozone European corporates can get ready, there are a number of benefits they will enjoy. First of all, they will enjoy cheaper international payments. They can make use of the richer remittance information that will accompany their payments and direct debits, and thereby enable more effective reconciliation processes. They can also use Sepa opportunities to simplify their bank account structures that may enable them to free up trapped cash and to simplify their operational processes and reduce the risk related.
So what is it that changes in 2016, and what does that mean for corporates?
From the 31st October, UK and other non-Eurozone corporates may no longer send non-urgent euro payments and direct debits to the 34 Sepa participating countries unless they comply with Sepa standards. So that means they either need to be compliant or they need to resort to urgent payments. A number of things change in 2016, taking Sepa standards a step further. From February 2016, banks are required to support payments and direct debits based on IBAN only, and corporates are no longer required to submit the bank identifier code. And that might make life a little easier for our retail customers. But for corporate customers, we generally advise that they continue to keep the bank identifier code as part of their payment templates, because that will still be required for their urgent payments and foreign currency payments. A corporate wishing to submit their payment instruction via file may need to do that in XML format. Many corporate treasury packages and payable systems of course support that as a standard today, but a large proportion of corporates are still expected to need to make changes to the way they submit payment files. All Sepa payments will be able to carry up to 140 characters of remittance information, and that will enable more effective reconciliation processes. Another change that corporates probably want to take advantage of is that, due to a scheme change, they will be able to submit their direct debit instructions several days later than they currently do and still receive their payments on time. Finally, a number of niche payment schemes that didn't need to migrate in 2014 will be doing so in 2016. So anyone still using any of those schemes will need to be prepared to make alternative arrangements. So, learning from the 2014 experience, our advice to corporate customers is to assess how much this change means for your company and to consider appointing a Sepa champion to manage and coordinate the required changes across all impacted entities.
What are the consequences if corporates aren't prepared?
Sepa 2016 isn't really a threat or a danger, it is an opportunity. A corporate who isn't ready won't suffer any fines, but they will miss out on the very real opportunities that Sepa compliance brings.
So Eurozone countries made their changes in 2014. How are the 2016 changes for non-Eurozone countries different then?
2014 was dramatic. We replaced domestic low-value and direct debit schemes across the Eurozone for Sepa standard. That was a gigantic change, both for banks and corporates across the Eurozone. This time, 2016 impacts primarily on cross-border, non-urgent euro payments, and that change is much less invasive. And many have already adapted their processes to submit Sepa-compliant payments wherever possible. So that also reduces the amount of change. But interestingly, despite that, after a few years of rather stable balance between Sepa and correspondent banking payments, at RBS we now see an increased product substitution towards increased use of Sepa payments. And that is good news, because that means that corporates are increasingly taking advantage of Sepa, and we are very committed to supporting them on the Sepa journey. Helping our corporate customers get the most out of Sepa will support them trading more effectively internationally and reducing the barriers to international trade. Supporting our customers' business is what we do at RBS, and Sepa helps us do that better.